Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the Canadian MJ sector. A couple points I want to make before we get into it, thinking about the sector and where we stand longer term. So right now, people need to be establishing a game plan if you have cash, because the market weakness in the S&P 500, which is some of the most significant weakness we've seen, as far as I'm concerned, this is the third time we've seen a major pullback in the last, let's say 18 years. So we saw this size of a pullback in the tech burst in 2000, 2001. We saw this in 2008, obviously a lot more significant than where we are at right now, but we're now seeing a very significant pullback, and it's on par with those kinds of scenarios, and they have lasted 1.5 years and 2 years each. This one is 3 months into the pullback, so we could be in a bear market in the S&P 500 for a while. As long as the weekly trend is in a downtrend, that's going to be the case. So with all of that being known, I was thinking of an analogy of the sector. So as we know, and as we've been saying for a very long time now, that the Canadian MJ sector is dependent on the S&P 500. When we were at all-time highs, it was literally the perfect scenario for the MJ space with where the S&P 500 was. We were at all-time highs. We were heading up into the hype of the first day of sales. And I was imagining an analogy of the S&P 500 market environment being the environment that a child is raised in, and the Canadian MJ sector being this new child, this new birthed industry trying to find its way in the world, and it's being nourished, it's being loved and cared for in this, safety bubble of the S&P 500 at all-time highs. And we hit a point where on the first day of sales and in early October, the child was put into the woods, and you're off on your own now, fend for yourself. So the S&P 500 got to be a very scary place and started to pull back significantly, and it was all weakness, and the strength was gone. That nourishment and protection for the sector was gone, and it's now a completely different environment. So that was my thought first thing when I woke up this morning. Not sure that's normal, but it's really, if you were to say to me, if you just were to push this pullback in the S&P 500 back a little bit, and if we had the first day of sales, let's say tomorrow, for the Canadian MJ space, in my opinion, names like CGC, we would be seeing the all-time high in the $40 range perhaps, and rather than $59. So I think that the significance is that big of a difference in terms of the market environment allowing for the euphoria to really take hold, because everything was all sunshine and rainbows, and that's no longer the case. So again, at this point, if you have long-term holdings, you're not looking to sell, in my opinion. That ship has sailed. That opportunity is gone. I would not be wanting to sell with weekly charts that look like this. I would say, all right, I made my decision. It may be a mistake that I can learn from in the future. I have not sold at this point, but I'm not selling now. And we're going to be looking for the S&P 500 to bounce again. We saw some initial signs for a bounce into Friday. That bounce lasted all of 10 minutes and got no follow through. And we're a falling knife. The S&P 500 is a falling knife. So it can get worse in the Canadian MJ space, but in my opinion, the risk to reward from these levels favors reward because the S&P 500 is so oversold in the short term. So that being said, if you have cash, like I've been saying, you have a significant opportunity, in my opinion. Again, this could last a year or more of weakness in the S&P 500. But in terms of establishing a game plan for looking for long-term holdings, this is the opportunity that a lot of people thought that the Canadian MJ names would never give us again because of the run-up in the strength that we saw. And again, a lot of people, and myself to a certain degree, took the S&P 500 strength for granted in that run-up. And now it's no longer there, and we're certainly feeling that. So all that said, observations and comparisons to the cryptocurrency space. We've been making cryptocurrency space comparisons for a while now, and that's because of the euphoria leading into the run-up of all-time highs. Everybody was saying, it's different because these are real companies with revenues, billion-dollar industry, and all that, but it doesn't matter. Emotional cycles are always the same. We had euphoria. Euphoria has popped. We now have fear and despair, and that's the emotional cycle that we're currently in. But I'm seeing it's such an interesting perspective for me personally, making these daily videos, seeing my analytics, seeing how cryptocurrency, the views of every video just started to drop, and people lost interest as we kept going down and down, and people just started to give up. And we're seeing that in the Canadian MJ space. the last 7 videos that I've made, every single day, it's less and less views. And we're seeing less and less people interested because at this point, I'm saying the same thing to a large degree. The bears are in full control. There's no sign of a bounce at this point. On any bounce, we're just going to form a daily lower high. So for people, speaking now to the Chart Guys members and anybody that's been day trading this space, this is not a space for day trading right now. And the opportunity has long passed for that. The opportunity here is going to be swing trades. So watching for potential swing trades and using smaller capital positions to allow for more wiggle room in between your stop levels. And at this point, we're just looking again for the S&P 500 to bounce, to give us a bounce on the Canadian MJ sector that's just going to form daily lower highs. There'll be some solid gains behind it when the S&P 500 actually gets a real bounce going. But again, shifting perspective, because we were so very active trading the Canadian MJ space on the way up and even the initial pullback because of the sizes of the bounces, that time has passed. If we were to trade as aggressively as we were just a couple months ago in this current market environment, we're going to give back a lot of capital, and that's not what we want to do. We want to push the pedal to the metal and trade very aggressively and very often on the way up, and on the way down, we want to pump the brakes. Unless, of course, you're an aggressive bear, then by all means, that's when you're putting your gas pedal to the metal. But if you're still looking bullish, you're pumping your brakes very significantly. You're taking way less trades. You're being way more picky and way more patient, waiting for a better market environment overall. So that's where we stand as we head into this coming week. Weekly time frame, we're down at the lows. We gave back the vast majority of the last leg up. We're back to pre-Constellation deal levels right around that area for CGC. And we're seeing news just not have an impact in this market because, again, S&P 500 sentiment and market sentiment trumps news. And that's just the way that it is. That's the way the markets work. So the daily time frame for CGC has seen lower highs every single day for the last 7 days in a row. So when that pattern breaks and changes, it will be notable. We're about to be oversold on the daily time frame. If we cannot break 28.46 on Monday, it's just another daily lower high for the 8th day in a row. So again, keeping an eye on that. The gap has filled. There was a gap down here at 28.37. And it was actually 26.37. And that gap has filled. So the next support level is 24.46. There's a very important support level here at 24.21. The bulls really do not want to lose that support level because there's a lack of support after that. So 24.46 and 24.21 are key support levels that the bulls must maintain. Any bounce under 33.65 is just a lower high. APHA daily time frame, we did break some support here. Didn't get a lot of follow through just yet, but we did close at the low of the day. So if we see a bear break of 650, then we're going to be looking down, and we already did. So we broke 650. We have $6 psychological support and then $5 psychological support as the next two support levels. So there is a lack of support in this range. The exponential resistance here, this 12 period, has been a nice guide on this daily time frame, rejecting multiple bounce attempts. And here we are fading back down towards our recent support levels. So the bears are in control, and the low close for the entire sector and the S&P 500 obviously shows us that. So it's going to be a very interesting psychological environment to be watching social media and holders of APHA if we do fade back down to the lows. So obviously, I would rather see everybody make money. But if we do fade back down to the lows, we'll see if the anger and the blame shifts back onto management for not putting out a rebuttal and things along those lines. I'm just interested at this point from a psychological perspective, and that's one of the reasons that I'm interested in the market as a whole. And without that, I think it would be very boring, just numbers on a screen, but it's attaching those emotions and the psychological aspect of it that does have me more interested in the markets. So I'm curious to see how that's going to end up playing out. On APHA, anything under 824 is just a lower high, and we have to find a new support level as we fade back down towards that dump low. ACB on the daily time frame. Clear follow through. It's looking like someone is shorting ACB fairly aggressively the past couple of days, and I think that's due to the lack of support. As soon as we broke that support level of 715, it's sort of a green light for the bears to have at it, and we can see a slight uptick in volume the past couple days. Not significant, but we are pushing back pretty hard, and at this point, after 715, we're all the way down now to 650. That is a very significant pullback of about 8+% in just a couple days. The only support nearby is 650. And then down to 621. Bulls really want to hold 621 because if that breaks, we're looking down at 529 as the next clear support level. Cron has given back the bull move in response to the partnership deal. So that's pretty much the market saying partnership deal is not enough to overcome the S&P 500 weakness and fear in the overall market. Gap has filled at 14.15 on this pullback, clearly losing the base of support that was trying to be established. Tons of selling and a weak close. So the next support level after 13.60 is down at 13.07 and then 12.19. Much better position on the weekly time frame. We know a weekly higher low is going to form on Cron, whereas we can't say that for anybody else. Everybody else is in a weekly downtrend, whereas Cron is looking for the higher low. So if I had to be in a position long term, I would want to be in Cron because the weekly chart looks so much significantly more different than everybody else, and it does stand out for that case or for that reason. TLRY on the daily. It's still a potential bear flag at this point, and we had an inside bar bear break at 74.11, pulled back to 71.25. So our most important key resistance at this point is 82.39. That's potentially our daily lower high. And we're now looking down at support after 71.25 of 69 even, and then 64.06. So TLRY has had 2 great news releases in the past 5 trading days, and you can see it hasn't done anything. The only thing it's done is hold the price pretty much even and not allow for further downside with the rest of the market, which is better than nothing. But again, not seeing the kind of action. And again, it's not a vacuum. The market is not a vacuum where a news release is going to be interpreted the same way and reacted to the same way, 1 month compared to the next. So 4 months ago, if you gave these 2 news releases for TLRY, when we were trading back here in the 170s, we would see a 20%, response to those news releases. And again, just cannot stress enough the importance of the psychology in the overall market having a direct impact on every individual sector that's involved in the market. And Bev finally got our bear break. Want to point this one out because it is a clear top fishing play for resistance. 690, unable to break that level, 685. And if you look at extended hours, we rejected from 695, 694, 690, and 685. So it was just clear lower high after lower high. Bulls could not break resistance, and they finally gave up and rolled over and lost the daily uptrend by breaking 602. A very clear short when 602 breaks. And this is an example of looking at a longer term time frame like the weekly chart and saying, all right, we got our high, low of the pullback. We know a weekly lower high is going to most likely form. That's the most likely scenario to see an equilibrium after all of this volatility. So if we're on the weekly time frame and saying, okay, we're scouting for a weekly lower high, I know I need to be cautious as a bull because we've already seen a 130% run up in less than 2 months. We know a lower high is coming, and that weekly lower high is going to be signaled by the loss of the daily uptrend. So this is using the longer term time frame to establish what is the most likely scenario. Then you zoom into the shorter term time frame and wait for that signal. And the signal was 602 breaking. So as soon as 602 breaks, we lose the uptrend. Here it is on the 4-hour time frame being lost. Lower high, lower low. It's a head and shoulders pattern. And as soon as that level broke, that's pretty much increasing the odds that our weekly lower high has been set by a very significant margin. I would just be making up a number, but for me, I would say, if it's a 50% chance that our weekly lower high is going to be set this week, and then we lose that support level on Friday, that just increases those odds to 75% for me. That's a very significant shift in saying, all right, it's time for daily consolidation now, and the weekly chart's going to have to establish a higher low. So at this point, support is down at 520. That break of 602 resulted in a very significant pullback in just a couple hours. We're talking, almost 15%, 12 to 13% or so. Resistance, 575 was an hourly lower high. The bulls are trying to maintain 520 support after 520 is 5 psychological. And then we're looking down at 415 as the next very clear support level. So consolidation mode, and Bev held up against the market and against the sector, standing out as a bull for quite some time, but nobody is invincible. And here we are now with some high selling pressure, bringing us back down to earth and giving us a weekly tightening pattern that we're going to anticipate. So I appreciate you all watching. I hope you have a happy holiday week and weekend, and we will continue to be here monitoring this space because there is going to be significant opportunity. If you're looking longer term on these names and you're waiting for the weekly trend change, that's the way to do it, in my opinion. Again, we waited for the weekly trend change back in the summer of 2017. We did not nail the bottom, but we sure had significant upside and follow through. The signal for me was when 667 broke. Again, that was 30% away from where the actual bottom was, but that's when the trend changed, and that's when the bulls saw significant follow through. So at this point, we can say to ourselves that any weekly bounce is just going to set a lower high. So if you're looking long term, that's maybe not the signal that you want to initially react to, because we know it's going to require a lower high, a higher low, and then a bull break for continuation to change the weekly trend change. And again, that's not happening anytime soon. So bulls can be very patient here. You can either act on a daily trend change as your signal with more risk and more reward. It's less likely that that's going to be nailing the bottom, but if it is, you're going to see much more significant gains. Or you just patiently wait for the weekly chart, and you can wait for the weekly chart in the S&P 500 and the weekly chart in the Canadian MJ space. And in my opinion, they're going to be very similar in terms of their timing of the bull trend change whenever that does take place. So again, hope you're well. We'll continue to check in. We're not going anywhere. We'll be watching this sector forever. Maybe we won't do daily videos anymore because, again, people are losing interest. That's understandable, but we'll be here. Have a good day. Do a good thing.